In this video, we're going to be talking about the live backtesting and forward testing process. First things first, we want to have our rules just like we did with the markup testing. I've got my list of 6 rules here, the same ones we used previously, but this time, rather than looking at the past price action, what we want to do is actually scale back to a given date and carry out the backtesting process as if we were trading live markets by using the bar replay tool. The bar replay tool can be found up here. If we press this and then we scale back, we can actually click on a day, and that is going to then take us back to that day where we can then play price forward as if it hadn't happened yet. Now, when setting up your backtesting, problem you may have is that you will see all of the price action before you scale back to it. Okay, so let's say you wanted to start your backtesting from, let's have a look at the 6th of September. If we go to that, we know the 6th of September starts here. We can actually see all the price action. So if we then use the bar replay tool by clicking these arrows, this one, and then clicking back to that date, we already know what's about to happen here, right? What we can actually do to avoid this, and what we can actually do as a remedy to this, is squeeze the price. So what I like to do before I backtest is go onto my pair, completely squeeze the price flat like this, so we have no idea what's going on either way. So we just simply have a line, and then we can go back to our given date. Let's have a look at the 20th of September, so the start of the previous week, and we'll start it at 7 a.m., which is the time we like to backtest, as covered in the previous video. Then when we unsqueeze price, we can see that we don't really know what's going to happen next, right? And now we can see we have a fresh view of price with little to no idea what's going to happen next. So what we can do from this point is start putting our rules into practice. Now, first of all, as mentioned, and as we've previously done, we will want to mark out our trading sessions. My trading sessions for these example videos are between 7 a.m. and 5 p.m. each day. So now we have our rules and we have our 5 days of actionable trading planned out on the chart. Now, what we can do is treat this as Monday, Tuesday, Wednesday, Thursday, and Friday, and trade through the price action and see what setups were presented to us. So the first thing to do then is begin identifying the break of structure with the trend. Well, it's obvious to us that the most recent break of structure with the trend was this movement here. We can then see we have a few imbalances, which is rule number 2. We have, first of all, this imbalance here into this zone, but we also have above this imbalance here into the top zone. So we want to keep an eye on these 2 zones. We can then look for supply and demand zones. So the most notable supply zone, obviously we're in a downtrend, so we're looking for supply. It's going to be this area here, and also this area here. And what we can then do is think about this logically. So this is the zone that broke structure. So this is actually the zone that I want to look for my trades to continue with this market down. Okay, so for my trading rules, I'm going to be looking for a movement like this. So what I can do is remove these zones for now, and then backtest as if I was live trading. So if I was live trading, I would be looking at this as a setup to sell from. And if we follow this rule of placing a sell or buy limit on the zone, we could go ahead and do that right now if we wanted to do so. Follow the rule with the stop loss above the supply and demand zone and a target into an imbalanced supply or demand zone. Well, I can see here the next imbalanced supply or demand zone down is going to be around this region here. So we could therefore go and target the area around 0.72140 for this trade. So what I've got here now is a setup just like what I would take live, but I've got it in the backtested price action. And what we can then do is skip through and see if the trade worked out, see if the trade formulates, and see if the trade wins or loses. What we can do is use this bar replay tool and click this button here to set us forward 1 candle. Now, if we do this loads of times, we will get multiple candles, and sometimes you may just want to do this and run through loads of price action. While that could be good if you have a swing trade setup, it's advised against doing this when you're in a position, because it's better to actually run through and see how your emotions may make you feel at each different candle. So looking at this setup currently then, what we've been showed is that yes, we have a valid setup. We'll continue running for this valid setup, but what we've now had form is a range. This increases my positivity in the trade because I like it when we get a range underneath an imbalance. That tells me that we're likely to break out the range, induce buyers, trade into the supply zone, and then sell off, right? As you will have learned in the previous chapters, that is a way that I trade. So what we could actually do then, now we have our order on, is just leave the trade to play. Now, as mentioned, we only want to trade within our specific sessions, but because we set the order within this session, that's a normal thing to do. And then what we can just leave the order to actually trigger, which is what I would do when I'm live trading. Okay, if I have an order that I want to set for a swing trade like this, I can set the order and then I can let it run. And when the trade's entered, when the trade's executed, I will manage it. But until that point, I don't need to actually dive in and manage the trade and keep removing and re-adding the sell limit. So leaving the market to do its thing, we can see some point on Thursday, we are triggered into the position. From this point onwards, we have our rules. We can then begin looking at the market candle by candle. So as you can see, we have an initial push down, but then we have a push back up to trade further into the supply zone. Now, this is why it's good to actually monitor each candle as it moves, because you can see, right, how would I react when this happened? Now, a lot of people may actually get out at this point in a panic that the market's going to reverse and go bullish, because we've had a rollover, but then we've had a push higher, which has essentially formed a very, very low time frame higher high. From looking at each candle, you can see that, okay, maybe this is not the right thing to do. Or on some aspects, you may think, okay, maybe this is the right thing to do. And you'll pick up on habits which are going to be very beneficial for you further down the line. So watching as each candle moves now, we can see we are ranging a little bit. Once again, we've had another push up just over this point. So this point, some people may be fearful and get out of the trade. Now, you should make a note of whether or not you would have got out of the trade at this point. Don't cheat yourself, because at the end of the day, the only person you're fooling is you. If you cheat within your backtesting, you're not showing this on anyway, and it's for your growth. So if you cheat yourself and you lie and you change things, or you say, oh, I marked this up so I'll take it even though I just said I was getting out, you're not going to progress from that, because what the idea is here, that we see everything we do good, we see everything we do bad, and then we learn from it in our reviews. So we can see then we had these pushes up, but then we started to sell off. And through Friday's session, we had quite a dramatic sell-off. Now, what we can do is the same as what we normally do here and say, okay, we're coming close to the end of the Friday session. So we'll extend this over to 10 p.m., which is going to be around this time. That for me in the UK is the market close time. So I want to make sure I'm out of this trade before the market closes. Well, at this point, I could then just assess the situation and see, okay, we've come and filled this imbalance. We've traded into this demand zone, and we've actually had a little bit of a bullish reaction. So because we're coming close to Friday, we're coming close to the end of the session, maybe I'm just going to close this trade where we are right now, at this level, and then see what we've made in profits, which in this instance is around 4% on this movement down. What we could do from this point is make our general markup as we do, and then move it into our backtest tracking software, which I'm going to be talking about in the next video. And that right there is the full process of live backtesting. You go through the markets as if you were trading live using that bar replay tool, and really get a feel for what it's like to actually trade live by executing positions that you have no idea what they're going to do when you're in them. It's very, very similar to live trading, but what it does is actually draw out some of the emotion. So that is why it's important to forward test and also live trade. But this is the closest you can get in terms of previous price testing to real live trading. So that was the process of live backtesting. To recap, the reason we live backtest is to collect as much data as we can across a large period of time in a small period of time. The data we collect is very realistic because we are trading in the live markets, and it's about the closest we can get to actually trading live markets without trading live markets. Some important things to remember when you're doing live backtesting are always to use the realistic timing for the best possible results. So when I say that, I mean the timing of the sessions and the days you trade. Be real with yourself always and make sure you don't cheat within your backtesting. You're only fooling yourself and you're only damaging your own progress. And make sure you take detailed markups of absolutely everything that happens within your session. You should always make sure you get the wins along with the losses, because you need to see how effective your strategy is long term. And if you cut out the losses, it may make you feel good short term, but you're not going to progress and you're not going to see any big mistakes that you can cut out of your trading. And you're not actually going to know if your strategy is profitable, because if you're only keeping the wins, well, what if the losses outweigh them? So that's just a quick recap of the live backtesting process that we've just been through. Now, the processes are just the first step. We test to benefit from our testing, to collect data that we can then use to track, refine, and work upon the things we're doing good and the things we're doing bad. So in the next video, we're going to talk about how to actually track your testing. The tracking and then the refining and benefiting are the most important things.